with us a bull and a bear to weigh in on this discussion. We have on the bear side, Tom Lydon, president of Global Trends Investments, and our second quarter bull is Mark Travis, CEO of Intrepid Capital Funds. Mark, I'm going to start with you. You're in the bullish camp right now, but I was reading through some of your notes, and you're not 100% in the bullish camp. And I want to point out one of the things that you say. You say the stimulus plan was a social policy, not an economic policy, and that has you worried about exactly when we're going to recover. Explain.
Well, Tricia is a born and dyed-in-the-wool free market capitalist. I'm really concerned when I listen to the previous segment, Austin Goolsbee, and like I like to say, the great central planners we've put in Washington, whether it's firing Rick Wagner or, all manner of industrial policy, it really makes my skin crawl. I think that in the case of GM, they should have declared bankruptcy in the fourth quarter and saved the taxpayers $17 billion.
Yeah, we've talked a lot about that on this show, whether or not they should have done it earlier and why they can't just do it right now. But back to how an investor is going to play this, Mark. Even though you're reluctant about what the government is doing right now, you're still saying you think we're basically near the bottom in terms of this economy and that we should be setting the stage for recovery, if I'm reading this correctly. So you're saying,
Tricia,
well, tell me.
Well, Tricia, I agree to a certain extent. I think the heavy hand of government should concern all of us as capitalists. But I also think the heavy hand of government and the non-stimulus stimulus package, as I refer to it, has created some volatility that's created an awful good opportunity to acquire financial assets, whether they be stocks or bonds. So I think there's some attractive businesses at very attractive prices that we're happy to acquire, and hopefully we can survive whatever the administration wants to enact to a brighter day and a higher price. Okay,
and I know some of the picks that you like, Heineken, Tidewater, Newmont Mining. We're going to get over to those in a second, but first I want Tom to weigh in because, Tom, what you're saying, it makes a lot of sense to me right now. You're concerned about what the government's doing. You're concerned about the unemployment rate moving higher. You're concerned about earnings going forward. And how is this affecting what you're doing with your money?
Well, if you just follow the trends and look at the general 200-day moving average, Trish, a year and a half ago it went below. So if you're following that, you would have had huge cash positions the last year and a half, and we're not putting more money into the market until we go above the general trend lines. Again, you look at the economics. The Obama administration has been on this PR campaign in full throttle. Americans are getting numb to it. Is that helping, though? Is that helping in some ways? We've joked about President Obama doing such a wonderful job being a stock market analyst because he called it, so to speak. Is it helping in any way, Tom? Well, he fired on all cylinders, but I think Americans are getting numb to it. I think at any type of rally like we're seeing right now, you have to sell into it. We've got earnings reports coming out in a couple weeks. It's probably going to be worse than expected. Investors are atrophied right now.
All right, you guys are sounding pretty gloomy.
Hey, Tricia.
Yeah, go ahead.
Anybody that calls it profit and earnings ratio obviously doesn't understand. It's price earnings ratio. So he just showed an ineptitude when he said that. He just happened to get lucky, and the market's risen since then. Right, he did get lucky, indeed. Guys, thank you so much. We appreciate it, as always. Good to see you, Tom. Good to see you, Mark.
Thank you, Trish.
All right, when we come back.